In March 2003, the total notional value of FX trading at the CME was approximately $347.5 billion. By no stretch of the imagination is that a number to sneeze at. It's a very large number. But as I said before, when you're looking at a market such as the OTC, which is trading 1.5 trillion daily, you realize that only a handful of people are trading the exchange-traded markets. One of the things we talked about in the last video series when we were speculating in futures is that only 3% of people actually take delivery of the goods. Well, I think this is a prime example of how this plays out. Since only probably 3% of all people who are even trading in the OTC market are actually hedging or using it to protect themselves against major currency fluctuations, it only stands to reason that only a small fraction of them would try and attempt to protect those positions in a futures market. And I believe that's the translation here, that even though the OTC market trades 1.5 trillion, the majority of those people who are trading futures are real traders who need to use both markets to protect themselves. So it kind of plays out. Next, we'll look at the Finex market and see how the Finex market developed and where it is at today. The New York Board of Trade is actually a conglomeration of multiple exchanges built up on acquisition. At one time, it was the coffee and egg exchange, and over time it's actually bought out many other exchanges to create a conglomerate of soft futures trade, futures contracts such as cocoa, sugar, and many orange, frozen concentrate, orange juice. And then in 1985 they decided to add currencies to their offerings to kind of expand and grow their marketplace. So they created the Finex. What their claim to fame has been the development of the US dollar index, as I mentioned before. But they've also done several other firsts that have never been done by exchanges. The great thing that they've done is they're actually based on two continents. They have a floor here in the US in New York, and they also have a trading floor in Europe, in Dublin, Ireland. It gives them a large breadth of people to trade their currencies on a daily basis, and has created a lot more liquidity than they may have had in the early beginnings of their currency offerings. And what they've also added, which I think appeals more to their European traders than maybe their US traders, is a lot of cross-rate currency trading. And I mentioned cross-rate trading before when I brought up the example of European, you may want to buy European Union currency versus Swiss franc currency. Well, these are cross-rate trades, and since they have a foothold in Europe, many countries who import and export throughout Europe and even Asia need these cross-rate tradings where the dollar is not so important to them. Their primary currency and their exposure to a lesser well-known currency is more important to them. So they've created in 1994 they created a lot of cross-rate currency trend futures contracts. And us as speculators, you should look at them and look at the opportunity to trade them from time to time, because that's where a lot of profits are. In total, the New York Board of Trade offers the US dollar index, and they offer 29 currency pairs for trading. And you can go to www.nybot.com to see all the currency cross rates that they trade. And also, NYBOT has a lot of tutorials and seminars which talks about how to trade the Finex. They actually have some on Real Player, so if you have Real Player on your computer, you can actually listen to them. And a lot of them are very good. Next and last, excuse me, we come to the Philadelphia Stock Exchange. Now, the Philadelphia Stock Exchange has a very unique history. It is actually the first stock exchange established in the United States. It was set up back in 1790. And as I told you before, in comparison, the currency markets, being only 30 years old, have nothing on a lot of the old stock exchanges around. So there is a lot of growth and a lot of opportunity still available. In 1982, the Philadelphia Currency Exchange, the PHLX, actually did something which was very unique. They began to pioneer the use and operations of customized currency options. This is the first time that those people who had been trading OTC options could come to one location, see particular prices, see volatility, see open interest, and kind of extrapolate from there how they should be trading their OTC derivatives options. Great contracts that they created. And they didn't limit these customized contracts to just the U.S. standards. They decided to offer American-style customized contracts. They offered various types of cross-rate currency option contracts, and they also offered European-style option expirations. And those of you who are familiar with options and who may have seen some of the other pristine option seminars will know the difference between American options and European style options. The Philadelphia Stock Exchange led the way for currency option trading and has fueled their growth by leaps and bounds. It's actually a large part of their income, and I believe they trade something like $270 billion worth of options. Again, a small number compared to the OTC market, but a huge number when you looked at maybe only 3% of those trading the OTC market are actually using these for hedging purposes. So, very exciting market. The only caveat was that the focus of all of their transactions has been on G7 countries alone. When the EU came out, they began to offer currency options on the EU. They've always offered them on Australian dollar, the British pound, Canadian dollar, the Japanese yen, Mexican peso, depending if it's American style, European style, Swiss franc, and the US dollar. So they've got a wide breadth of options available, but only if you like to fixate or focus only on the core hard currencies that the OTC market delivers to you. Now, the advantages and disadvantages of trading futures markets. I believe the number one advantage of trading currency futures is that the exchanges have transparency. This is a great thing. As we spoke about in the last seminars, with the Commitment of Traders report, as well as open interest and volume, you're able to clearly see who's buying what, why they're buying it, the number of shorts, the number of longs, where the currencies are leaning towards. And the great thing about this is, while this information is lacking in the OTC market, you can use that information, say for instance on the European currency that's traded on an exchange, you can use that information and extrapolate it backwards to give you a picture, if not the exact numbers of what's going on in the OTC market. And that's really how to trade the Forex OTC market. Constantly look back and forth between the exchange traded as well as the prices that you're receiving from your dealer in order to get a clearer picture of what's happening in that market. And that's why I said before that a lot of the technical analysis we spoke about in the last seminar is easily applied to Forex trading. Second, which is a very good thing about the exchange traded markets, is the guaranteed counterparty system. As we said before, clearing firms actually guarantee an actual seller for every buyer and an extra buyer for every seller. Well, in the interdealer market, it's a little bit more dicey. Many people who want to trade the Forex market, who have seen others trade the Forex market, have undoubtedly heard nightmare stories where they've invested in Forex and either there was no counterparty to their trades and the actual dealer was being the counterparty and profiting from their trades, to dealerships closing down with people's funds on deposit. And that kind of falls back into the exchange's transparency. If you want to find out more about any shenanigans or any problems that have been going on in the foreign currency market on the OTC side, it's good to go look at the CFTC website, which is the Commodities Futures and Trades Commission website, which has now begun to regulate a lot of Forex dealers through their FCM program. And so they've been more closely scrutinizing a lot of the problems that have been going on